That's a snapshot of the market. The BSE 500 advanced decline, 75% of stocks advancing, 17% of stocks declining at this hour. It gives me great pleasure to welcome Ajay Srinivasan, CEO Financial Services with the Aditya Birla Group. Thanks very much for joining us on NDTV and congratulations on the launch of Aditya Birla Health Insurance. I'm quoting from the press release which you put out, which says you're launching with a differentiated business model. How is your approach different?
So our approach is different in at least three different ways in terms of where we are relative to where the industry is today. The first is that we're looking at providing health insurance for all. We're looking to cover segments of the market that are not covered today, whether it be people who have pre-existing conditions that many people in the market don't cover today, or the healthy customer who doesn't see the need or value from buying health insurance. So the first differentiator is really the fact that our health insurance is going to be for all. I think the second differentiation we're looking at is innovation. We're looking at bringing innovation in the way we offer products, the choices we are offering people, and in the way that the customer engages with us. That innovation is completely driven by our understanding of the customer needs, and where the customer is in their life cycle. And as a result of that, our engagement and our offering is completely different to where the industry is currently. And the third, I think, is we're looking at this as being a partnership. Currently, if you look at the health insurance industry, the interaction takes place at the moment of a claim. There is no other engagement between a customer and the health insurance provider, whereas we see this as an ongoing engagement. And we're able to do that because our partners from South Africa, MMI, have a tremendous amount of IP in terms of understanding how you deal with wellness and how you deal with somebody's health. And therefore, a healthier person not only achieves their life objectives, but also is a much more profitable customer for a health insurance company.
And I wanted to focus on your partner, which is MMI. It's a diversified financial services leader in South Africa. What is the specific value they bring to this joint venture in the Indian context?
So if you look at the South African market, the unique thing about the South African market is you have to provide health insurance cover to everybody, even if they have a pre-existing condition, and the price has to be the same. And therefore the IP is really around managing illness, because you are going to get people who come in who have an illness when they come into you, and therefore you have to deal with the illness during the life cycle of that customer. And that is the IP really that we are getting from MMI into our market, is how do you deal with a pre-existing condition, how do you deal with issues that may crop up in somebody's health that has to be dealt with over a period of time.
What are the terms of the partnership?
So it's a 51-49 joint venture between MMI and Aditya Birla Group. We are 51% owners, they are 49% owners.
What is the pricing approach that you're going to follow, the pricing dynamics? Because, you've talked about differentiated, and some of it has to do with, the perception on price versus value derived.
See, we look at price in relation to value, and I think the value that I think we're going to be able to bring to our customers is going to be quite different to anything else in the market, because we believe we are unique, we're differentiated, and there's really nothing to compare to. So today, if you have a pre-existing condition and nobody covers you, what do you compare the price of our cover to? You compare the price of our cover to what you would normally pay yourself. And we think it's going to be definitely less than what you would pay yourself if you follow the protocol that we have. So I think we see it as a price-value equation rather than a pure price equation, because we think we're going to be able to provide multiple opportunities for our customer in terms of being able to deal with their health and the health conditions that they're bound to face.
What kind of goals have you set for the near term, for the medium term?
So really for us, scale-up is going to be very dependent on how consumer behavior changes and how much we see an uptick to this completely new offering that we have. Because any change in consumer behavior takes time, and we expect that this will also take some conversation and some interaction before people change their behavior. So really our initial approach is really to just make sure people understand what the offering is, why it's in their interest, and how it's very different to anything that they've done before in the health insurance industry. And I think once we start seeing traction in that, we're originally launching in 7 cities with 9 branches, but of course through a multi-channel approach. So we will be distributed through multiple channels across the platform. But as we see traction picking up, I think you'll then see us increasing our footprint on the ground in terms of branches and our own branches.
Okay, you're a relatively late entrant in the segment, and that's why I'm going to stick with this for a moment. I'm quoting from your press release again, where you say that you hope to have significant market share by 2020. What is significant? Can you put some numbers to that?
So for us, a significant market share is a market share that puts us amongst the top 3 in the industry. It's very difficult to forecast what the top 3 in the industry will have by 2020. But my guess is a market share between 5 and 7% by 2020 would be a good outcome for us.
Okay, I'm going to take a step back from, Aditya Birla Health Insurance and ask you, how is the health insurance sector poised in India today? I mean, it's a sector that's been present and should have grown faster. How's it poised?
A good question. I think if you look at the Indian stats, it's pretty compelling in terms of the size of the opportunity. So only 6% of Indians altogether own a health insurance, and this is compared to 35 to 40% in China, 70 to 80% in the US. So we are significantly under-owned and under-protected in terms of health insurance. If you look at the growth of healthcare costs, it's rising faster than general inflation. If you look at pre-existing chronic conditions that people are having from lifestyle, it is increasing at the fastest pace in India. And today, 70 to 80% of healthcare costs are borne by an individual out of pocket because they don't have adequate cover. This, to my mind, is almost like the perfect storm. You're asking for a situation where healthcare costs are going to increase, the requirement for healthcare coverage is going to increase, and you want somebody who can partner with you to deal with your various conditions that you're going to be able to face, going forward. So we see most financial services products are under-owned and under-penetrated in India, but health insurance is probably the lowest penetrated sector so far.
And I can attest to that. Let me offer myself up as an example. Aware, financially empowered, and yet I don't have health insurance. I'm not doubting the opportunity in the health insurance sector in India, but capitalizing on that opportunity, converting it is not easy.
Yeah, I think the proposition has to be communicated clearly. The benefit has to be made apparent to our different segments. So we're catering to 3 very broad segments if you look at it. We're catering to somebody who's already a health insurance customer. For them, we're giving them the benefit of significantly greater choice and flexibility compared to what they do today. The second segment we're going to offer is a healthy customer like you who doesn't see value in the current health insurance setup because they say, what's in it for me? I pay the premium, but what do I get in return? And for them, we have an entire program of incentivized wellness, which gives them several benefits as a result of purchasing our product and engaging with us. And the third segment, which is probably the largest segment in the market today, are people who are 45 years and above who probably have some pre-existing condition, and we're covering 5 pre-existing conditions, day one when we start out, who don't get coverage today from the traditional system. We will look to cover them as well. So really it covers different people with different propositions in the market.
I want to change gears and talk a little bit with you about demonetization, an event that's gripped the nation. What's your own impact assessment? I'm keeping my question broad.
So I think this is obviously a very topical question, number of people interested in what's happening. I think it's very early days. Personally, I think it's very early days, and I think anybody who's calling an impact is making a call based on very early numbers, which doesn't always pan out the way it is. My sense is there is going to be a period of adjustment, and that period of adjustment might be slightly more than people originally thought. But I see ultimately I'm looking through what might happen in the short term, because I think in the longer term this is an amazing outcome for India, whichever way you look at it. I think it brings in money into the formal system. It has the ability to lower rates significantly. It has the ability to lower tax rate. It gives the government a much stronger fiscal position, which it can then use to kickstart different parts of the economy. So when you look through all the other longer term benefits, I think any short term pain seems well worth it.
Okay, the question is about the extent of that short-term pain. It's a tough one to predict. So let me just ask this question slightly differently. What markers will you be looking at to assess the impact of demonetization, good and bad, in the months ahead?
So I think you'd be looking at how much money comes back, what the government does with that money, what it does for the fiscal deficit, therefore what opportunities the government has to both increase expenditure as well as reduce taxes. So how the government deals with the money that it gets, what it does to the banking system, what it does to interest rates, and therefore what it does to capital investment. I think it just has so many legs. We have to kind of watch all of these things as things pan out.
I'm going to leave it at that. Ajay Srinivasan, CEO Financial Services at the Aditya Birla Group. Thanks very much for joining us on NDTV, and congratulations on the launch.
Thank you very much.
We're taking a break. After that, Gopal Pillai, Director and General Manager, Seller Services at Amazon.